Good afternoon, Brian from JB Warranties, back with another edition of the Trade Talk podcast. Today is going to actually be part one of a three-part educational series we're going to be doing around the topic of how to buy a HVAC or plumbing company, how to sell your company, and how to fund that project. So today we've got Patrick Lange in with Business Modification Group and Brandon Bolen in from Live Oak Bank to discuss basically a Q&A on what you might be thinking about if you were looking at buying or selling your business. So Patrick, good morning, sir. How are you?
I am fantastic. Thank you very much for having me. It's a pleasure to be here.
Good morning, Patrick. Could you tell us a little bit about your history first and foremost, if you don't mind?
Absolutely. So I come from a financial background. I owned a financial planning company in my younger years, and some people have a midlife crisis and buy a Corvette. I bought a heating and air company, and so I've been a business broker for probably 11 years, I guess. And 5 years ago, I bought a heating and air company that I had listed for sale, actually, for somebody else, and ran it for 2 years. Realized that I didn't want to be in the service business and have employees. And shockingly, my oldest son, who worked with me in the business, told me he wanted to buy it. So 3 years ago, I sold it to him. He made his last payment to me probably 2 or 3 months ago. So we're still friends. And he's running the business today. My office, where I'm at, is actually inside of his company offices. So my office, I'm still in a heating and air company office building on a daily basis. And at that point, 3 years ago, I switched my entire business to just selling heating and air companies. Started just in Florida, expanded through the Southeast, and then I've been fortunate the last 12 to 18 months gone nationwide. Now I sell more companies outside of the state of Florida probably than within, and I'm fortunate in the last 3 years to sell more heating and air companies across the country than any one broker. So I've been blessed to be busy, and we're trying to keep it expanding.
Again, Patrick, I may have missed it, but what was your company name? Is it Business Modification Group?
Yep,
And
that's
you're
exactly
based
it.
out of Florida, is that right?
Yeah, I'm in a little town called Horseshoe Beach, Florida. But the bulk of what I do, once again, I spend my weeks and days traveling. COVID has limited a little bit of that travel, but it also makes the planes empty, which has been kind of nice. So I seem to be in California once a week, New Jersey. I've been all over the place. Last 3 weeks, I've been earning my frequent flyer miles, but I'm based actually out of Florida.
All right, perfect. We'll come back to you, but let's go and get a little bit of history on Brandon Bolen. Brandon, tell us a little bit about your history, if you don't mind.
Yeah, so my name is Brandon Bolen, lender on the service contractor team at Live Oak Bank. I've worked at Live Oak my entire career, and we're actually unique as a lender. Most banks will set up a bunch of branches in a geographic region and provide financing to homeowners, consumers, businesses alike, with really no specialization in any one product or any one industry. But we're pretty much the exact opposite of that. We have one bank branch in Wilmington, North Carolina, and we have teams at the bank that focus specifically on industries using just a handful of products, with our main product being the SBA 7A loan, which is a government guaranteed loan. And our team here at the bank exclusively focuses on providing financing to HVAC, plumbing, and electrical home service companies in all 50 states in the United States, mainly through the SBA loan program. And what that is being a government guaranteed loan, we can provide financing to home service companies to expand without focusing on collateral. So your access to capital to grow your company, whether it's by buying the business across town or in a county over to grow your service area, or buying real estate, your chances of getting approved with an SBA loan are greater than with a conventional bank. And because we understand home service companies, they don't have to educate us on that they were deemed essential last year and that they only do service repair replacement work. And a residential company isn't going to have a lot of receivables, stuff that a normal bank is going to ask a lot of questions they're not going to understand. You don't even have to answer those questions because we already get it. So that's who we are in a nutshell.
Gotcha. And I would assume you do a lot of deals with Patrick.
That is Patrick. Patrick and I work pretty closely. We talk almost every day, if not every day, every other day, sometimes multiple times a day. But his role being, helping home service companies in the heating and air space looking to sell, a lot of times those buyers are going to need financing, and kind of where we fit in is we provide the financing. We're giving that business or that buyer a loan to buy the seller's company. That seller has spent years, building value in his business. And we look to be the key to unlock that, but also give a new buyer the chance to get into that business, maintain it, and grow that company as well.
Very good. Well, guys, thanks for being on today. That's again, what we're trying to do is just an educational 3-part series. I was fortunate to catch you guys on stage out in LA a couple of months back, and you guys were just dropping pearls of wisdom that I knew our customers could benefit from. And a lot of them are asking us these questions, particularly, I do want to expand. I do want to grow. Maybe I don't have the time and the patience to do it in-house organically, but I would like to add a plumbing component to my business. Or if I'm a plumbing company, I'd like to add the air conditioning arm of my business. So what we want to do is just highlight today, Patrick, we want to highlight you and what you do and how you fit into the equation. The next series the next episode would be highlighting, Brandon, what you do and how we'll gather some Q&A from our customers before we do the second part. And then the third part's just going to be really how to max value your business if you're going to position it for sale. So Patrick, the first thing I'd like to ask you is, if you're a $2 to $4 million air conditioning or plumbing company, what advice would you give to someone in that position that's looking to prop the business up to sale? And then secondly, if they're looking at acquiring a competitor, different scenario, but if they're looking down the street to add a plumbing component to the business, what are the first steps in getting the ball rolling on that?
Okay, kind of answer those separately. The first thing, getting it ready to sell. I think there's 4 things that I stress people to focus on if you're looking at selling, and one of them is clean books and records. If a buyer is going to come in and want to see what's been going on, and if they need somebody to bring in somebody like Brandon from a lending perspective, they're going to want to see what's going on. And so treating your business like a personal bank account makes it challenging. If you're paying all your bills for your house out of your business and then expecting somebody to write you a check for it, it's not going to happen. So the first thing is clean books and records. It's going to dictate what the selling price is going to be and what's a bank able to lend on. And so we've all, as business owners, have been ingrained in reduce taxes. And so everybody does everything to be creative with their accounting and try to minimize that tax exposure. But the reality is you're getting paid a multiple, depending on the size of your company, of that net income. Well, if you're saving 15% in taxes by running it through the business, and you're losing what could be a 3, 4, 5 time multiple on the back end, it's a foolish mathematical way to do it. So making sure you have clean books and records is the first thing. Building a business that's built on service, maintenance agreements, service, warranty work, all those types of things is what buyers love to see. They love to see repeat revenue. They don't want to see a marketing budget that's 70% of the business. They want to see repeat revenue, maintenance agreements, once again, warranty agreements in place so that they know that the customer's going to come back to them repetitively. Something that stays away from new construction. And Brandon can probably talk about how the bank's perspective is on that. I don't sell a lot of business that are new construction based, simply because oftentimes the loyalty of a general contractor is not extremely high. And if they are loyal, they're loyal to the seller. And so when they leave, that loyalty leaves with them, and a buyer doesn't like that. So minimizing new construction exposure is a key. And then often minimizing the owner's involvement in the business. And so if you're the head salesman, the head technician, the head installer, the face of the company, when you leave, that reputation leaves with you, and that makes buyers nervous. So if you do those 4 things, clean books and records, minimize new construction, business built on service and repair, and minimizing your time in the truck or your time being the face of the company, typically that'll lead to a higher selling price and a more desirable business. That's the first thing. And typically, if you do all those things as well, it leads to a higher revenue business, which is a higher purchase price business. And so that's a good thing. So the flip side, you're looking to acquire. First thing is, I believe, is making sure your ducks are in a row in your own company. If your company is disheveled and you don't manage people well, and you don't have good systems in place, and you don't have a CRM like a House Call Pro or a Service Titan or something along those lines, you're struggling in yourself. buying more technicians and buying the phone ringing more doesn't fix your problems. You need to have your systems in place before you do that. And to me, buying that company would only magnify your problems. And so making sure you're in a position to acquire a business and have the systems in place to handle that transition, because to me, it's so important when you make that acquisition, making sure the employees stay and the customers stay are so important. And if you can't get to your own calls, much less 50 new calls that come in a day, those customers are going to leave. I mean, so you're buying nothing as they're walking out the door. So making sure your systems are in place, I think, is a key step first. Everybody's talking about acquisition. Well, make sure your own house is in order before you go out bringing somebody else's in. And then once you've got that part taken care of, then it comes down to dollars and cents and what you feel is a good fit.
Patrick, what level do you need to engage a CPA on that clean books and records? What do you find, or what would you suggest for the guys that maybe are doing the bookkeeping in-house, or someone in the office is doing it? How much easier is it to get a better multiplier if you're engaging with a CPA? It's not something we've covered on the podcast, really. We've definitely covered getting your processes down, using a field service management platform. We've even, established partnerships with many of them. But as far as getting clean books and records, any advice on the first step for that?
Yeah, I think working with a good accountant or CPA is important. I don't fix my own air conditioner because I can't fix an air conditioner. I'm going to pay somebody to come fix it for me that does it all day, every day. Most people that are in the trades are not accountants. They're not trained in that field. And so I don't believe in blindly giving it to somebody and telling them to take care of it. I think you've got to know what your numbers are and have a good understanding of what drives the business. But at the same point in time, to know all of the accounting rules and how things are categorized and what you should be doing, most people's time is better spent doing what they do well, and that's servicing the customer and taking care of their employees. So I think that's a huge thing. I think if you can outsource that to somebody that you trust, once again, not giving it away blindly, but having somebody do the preparation for you that you're reviewing is a huge thing, because then when you're in the due diligence process of the sale, or even when you start with me, it's so much easier for me when I meet with a seller and I say, I'm going to need a P&L and I'm going to need X, Y, and Z in order to look at really what the value of the business is. And they say, here's my accountant, call her or call him. I can call them, say, here's what I need. They send me it instantly. I can call and ask them a few questions and they answer it. Most business owners, if I say, where did you classify your car payments? They're like, what are you even talking about? So I mean, that's not where they make their money. And so I think that's an incredible piece of advice that once again, not doing it blindly though, I mean, not just saying, I don't know anything about it, because I think that opens you up to more problems. Having an understanding of your business, but have somebody who prepares it for you, whether that's weekly, monthly, whatever it is, depending on the size of your company, is a brilliant thing. I know with my heating and air company, when I initially bought it, I had a bookkeeper and I paid her minimal. She came in one day a week for a couple hours a week. And every week she gave me a financial report. I didn't know how she did it. I just had to see the results of it. And if I had a question, I could say, where did you classify this? Or what did you do with this? So it was much, much easier for me to go through my bank statement every week and say, oh, that was cost of goods. Oh, that was employee. Oh, I have to file a 941 for payroll. What's a 941? I mean, it's just, there's so many better things that you could be doing. And it was cheap. And it still is cheap. She's still with the company today. She works more now because the business has grown, but it's a resource that I would strongly recommend delegating.
Yeah, you just mentioned going through the finances. How many years back, when you get a deal together and you're going to bring it to Brandon, how many years back are you looking at financial records?
Typically 3 years. If we're at now, I'll ask for 3 years of return plus last year's, typically a P&L. Most people don't have their 2020 taxes done yet. And so I'll get the 3 previous years of taxes and a P&L. P&L is not always going to match the tax return. I have found that most buyers want to look at 3 years. Brandon can answer more about that. I find most banks, when Brandon sends me the report, he wants to see 3 years. So I just get it ahead of time. And that's kind of putting the package together. And so when I send it to him, I'll send it to him with 3 years. And if I don't have the P&L, he may call back and say, where's last year's P&L? Because it's not, 2019 returns not real relevant to last year's figures. Specifically, with COVID taking place, but typically 3 years.
Gotcha. Okay.
So Patrick, your target business, or what you generally deal in is, would you say under 5 million, companies that are somewhere under 5 million? I think that happens a lot, where a lot of these companies are banding together or merging, or somebody's acquiring the guy down the street. With the influx of all of the private equity in the space, is it more competitive? Is it harder to find a business like that? You arrange buyers. Have you seen any changes in the trends in the last couple of years as far as difficulty in finding a company that you could acquire?
Oh, absolutely. I spend 90% of my marketing budget on trying to find a seller, because everybody out there is trying to buy a company or say they want to buy a company. I think everybody talks about the private equity push, and I see a lot of it. I find a lot of those buyers spreadsheet themselves to death and never write a check. So, they say they're getting in the heating and air space, and I interview them before I give them any information. How many heating and air companies do you own now? None. Okay, what's your experience in the heating and air business? Well, I worked for a fund that managed a fund that had some heating and air exposure. And so I think there's a lot of talk about private equity, and there is a big push of private equity, but not every private equity buyer writes a check. And I think most of your listeners that are in the space can tell you that they're probably getting, 3 or 4 pieces of mail a week from companies down the street that say they want to buy them. Yeah. Some of them I think are bottom fishing, to see if somebody will just sell. I think some of them are real buyers. So my job has gotten progressively harder as the market's gotten better. I think the last 12 to 18 months, the market has been strong for sellers because of the private equity push, because of many bigger companies realizing that they can acquire a company cheaper than they can market their way to the volume that the company's doing. And they get the employees, they get the vans, they get the equipment, they get the maintenance agreements, they get the service contracts, they get the warranties with it. And so it's one-stop kind of shopping from an acquisition standpoint. So my business has gotten substantially harder to find quality listings. Buyers are not a problem for me currently. My average deal, I think I have 14 listings right now, and every one but 2 are under contract. And the 2 were listed in the last 2 weeks. So, and one of them, the buyer is currently working with Brandon now to see if they can get approved. So that one may be under contract right away. So there may be one that I don't have. So finding the buyers is not the problem right now. It's finding quality businesses to sell. Back to the same 4 things we're talking about, because I'm looking for that as well as a broker. I want to minimize my risk. So if it's like Where's Waldo looking at your P&L to find how you're making money, because you're paying your wife this money for this, and you're paying your ex-wife this money for this, and all this money is flowing through the business, and I've got to try to get creative to find a way to take it to market. It's harder for me. And so, and with the private equity push, many people unrealistically so think they're sitting on a business that's worth $10 million. And so one of the first conversations I have with a potential seller, we'll talk about the numbers a little bit, and I'll say, in your mind, what do you think the check needs to say for you to walk away? If I brought you a buyer today, what does the check need to say? And I can't tell you how many a week that I talk to that are doing $1 million in sales, gross sales, and they'll say, well, I wouldn't leave for under 5 million. Well, the market's strong, but the market's not that kind of strong. And so it's either an educational process where I say I'm not a miracle worker, nobody's going to pay you that kind of multiple, or, best of luck, I'm not the guy for you, see what you can do to get it sold someplace else. So I have that conversation a lot. And partially because people don't know where to look for what is the value. I mean, that's the thing for most business owners. They have no clue what's real. And people who sell their company, even ones that get bad deals, are not calling their buddies and saying, oh, I sold my company and I got ripped off. They're telling everybody what a great deal it was. Oh, they're paying I heard yesterday 15-time multiple. Wow. And I said, somebody told you they got a 15-time multiple? Yep, he was doing $1 million in sales and he got a 15-time multiple. And I'm thinking, that guy's special. I mean, I haven't seen that kind of number. So So nobody's going to brag about the bad deal they got. And so I think by the time the story gets back to everybody, there may be a little fluff that's built into there. And so I spend a lot of my days trying to be the voice of reason, saying, because here's the reality. Most deals are done with bank financing, and I'm going to send it, when I list a business, I'm going to send it to Brandon first and say, you know, Brandon, here's our listing price. Here's what we're looking at. Here's 3 years of tax returns. What are your deal? Brandon knows his bank has to approve it. It's got to go through an appraisal process, and Brandon can talk more about that than I can. And so he's going to call me back and say, yeah, we could probably do it in this environment, or no, we can't do it, and here's why, or maybe if it's like this. And Brandon, do you want to talk more about that? You can explain that better than I can.
Yeah, I mean, simply from our perspective, we don't, as a bank, we don't necessarily assign a value. Being a cash flow lender, what we do is Patrick talks with the seller, they determine a price, and then we say, okay, Brandon, this is the high watermark. If you have a buyer, do you think that they'd qualify for financing? Sometimes I'll look at it and say, yes, any type of buyer that comes in the door and they have good credit and they have, you know, solid resume. If they own a business currently, you know, do they have a strong foundation? Yes, we can do this. Sometimes it might be an individual. Yes. And having an appropriately priced business, you know, it can be on the higher end, you know, and get a little higher with multiple, and we can get comfortable with that. You know, there's certain ways to do any deal really from a, you know, you might increase your down payment and debt load might be a little different. But from our perspective, the biggest thing is when we finance a deal, we want to make sure that the buyer is in a position to repay the loan. We don't want to give them $1 million business or $1 million loan where the business they're buying could only support a $500,000 loan because they won't repay the loan and they'll be in trouble. So our biggest thing is when we look at the business, we make sure it can cash flow it. I'll tell you, Patrick sends every deal. I have never had a problem saying, look, this isn't priced fairly. You know, it's always something that can get done, which I think says a lot about Patrick's role in the process. You know, when somebody's looking to sell their business, ultimately you're wanting to sell because you want the sale to actually go through. And having somebody with Patrick's experience in the industry, nobody's done as many of heating and air sales as Patrick. He knows the market. He knows what's price you're going to get and be able to have a fair price that's going to get you the value you want. But ultimately, you only get that value if the deal closes and the funds either come from the bank or the buyer. And that's where Patrick's niche is. That's where he's really helpful in he can be the difference between a deal getting done and a deal not getting done. So I know that was kind of a long-winded answer to the cash flow topic, but I think that's plays such an important role.
So on that topic, let's say you're an air conditioning technician who really mastered the craft, decided to start your own business, built it up. Now you're actually looking to sell. And I don't know the answer to this, so I'm just looking for some education and some knowledge here. But so you can list and sell your business just like your property, correct? So engaging brokers, can you talk a little bit about how that process works, engaging with someone to list the business and just the first step?
Yeah, absolutely. There's brokers who do everything. There's a lot of incredible brokers across the country. I chose to focus just on heating and air. And for 7 years prior to that, I sold everything. And I realized that I couldn't add value. If I sold a gas station today and a flower shop tomorrow, I couldn't add value to either one of them. You know, I mean, and if you come to me with a restaurant, I can't tell you about liquor license laws because that's just not what I do. And so I want to be able to add value. And I found that by looking at as many deals and doing as many deals as I can, I'm able to relatively quickly say, here's where I think it'll sell and here's why. I'm based in Florida and I'm on the state of Florida Board for Business Brokers of Florida. And so we're an organization. We actually have an MLS system, just like in real estate. We're the only state that has one, but we track all business sales. And so I can look at heating and air companies that have sold in the last 12 months, and that's got to be with a broker. But I can look at heating and air companies that have sold in the last 12 months, what multiple they sold for, what kind of assets was included, with the numbers based off a tax return or a P&L, how many days was it on the market, just like a house. And so, and in the state of Florida, and I do this nationwide, I believe in co-broking a listing. And some brokers argue, and it shouldn't be an argument in my opinion, but so if another broker brings a buyer to the table, I'm happy to split the deal with them. I'm all about getting the business sold. So the faster the business sells, the faster I get paid. The bigger the deal is, the bigger my check is. And so I have a vested interest in selling it at a market value in a relatively short amount of time. And so if another buyer brings or another broker brings somebody to the table, I'm all for that. Now, some brokers don't believe in co-broking. There's a lot of parts in the country where I'll call them up and say, I have a buyer for the business. And they say, we won't work with you. We're going to find our own buyer. And I think, if you sell a business or two businesses a year, every deal is important. So to justify your paycheck, you can't afford to give away half of your money. My belief is different. If you do enough of them, it's all about getting it done for that customer and finding them a buyer that's qualified as fast as we can. The reality is nationwide, only 20% of businesses listed with a broker sell. So 80% don't sell. And I believe there's a lot of reasons that go into that. And poor pricing, I think, is the first one.
Yep.
Many people in my profession will meet with somebody and they'll say, I want 5 million. And they'll say, okay, and they list it for 5 million without ever saying it's never going to sell at 5 million. And so it sits on the market, everybody gets mad and everybody goes away. And then the business eventually closes down. So my belief is price it where the market is. And by able to look at comp data, in addition to the state of Florida stuff that we track, I also subscribe to other services that tracks comp data across the country. And so I'm able to look at what sells. In addition, selling, depending on the year, 20 heating and air companies a year, from Florida to California to New Jersey to everywhere else. I have my own comp data too. And I know what makes the phone ring. I know what we've sold for. I know, and so I'm able to use that stuff as well. So once again, as Brandon said, we're here to get it sold. I mean, people don't hire me to get it listed. I can't feed my family with a listing. My business drives on business sales. And so I tell them when they come to me, here's where the market is. And here's what it's been selling for. Here's where I think it is. Now, the last 12 to 18 months, that's been a little more challenging. The market's been pretty hot. And I've seen a lot of private equity, and I shouldn't probably say this publicly, I pay stupid multiples, in my opinion. I think when you look at it from an operational standpoint, if you're an operator in the business, and I've been an operator and I'm around operators all day long, and you see these multiples that people are paying for them, mathematically, it just doesn't make sense. And obviously that's Brandon's job to say, no, we can't lend on that because you're not going to succeed. And so, but when it's investor money, they're able to do different things. And bigger companies, I've sold several companies, quite a few companies, private equity groups that are doing 80 million, 90 million, $300 million in sales. And so they have a different purchasing power than a traditional operator. Obviously, if you're buying $150 million of equipment a year, you're buying it probably cheaper than I was at a company doing $1 million a year, And so there's different economies of scale. What you pay for your CRM system with 50 employees or 150 employees is probably different than what I pay for a CRM system. So those, you take those outliers out of the equation, and there's a certain mathematical way that if you buy a business, this is what you need to operate under. And so the last 12 to 18 months has made that a little more challenging, but I base it on real data. What's it worth? It's worth what somebody's willing to pay for it. And right now people are willing to pay a little bit more, but I think because of a lot of reasons, I think we'll start seeing that come back more to reality. I think, driving the push has been low interest rates. I'm sure Brandon can talk more. I'm sure his bank has been doing some record number deals the last year or two. Low interest rates, the banks have been willing to lend on companies. We've had some good years economically. And so I think that can't continue forever. And the private equity push, I think, can't continue forever. So for those looking to get out, I think it's been a great time the last 12 to 18 months. I think it'll continue for a little while longer. My crystal ball works as well as everybody else's does. So who knows how long that'll last for.
So on your 4 steps, one thing you said was building your business around like service work, maintenances, and warranties and stuff, without discussing the warranty work, because we'll save that for that building your valuation podcast. Do you see any trends as far as guys, and you also said try to stay away from new construction. Is there a ratio that you're looking at for service versus installs? Is there a way to max the value when looking at service versus installs versus how many maintenance people? Can you speak a little bit on that? Why it's good to just have steady service work?
I haven't seen any specific trends. I mean, most companies are relatively in line with one another, what I've seen. I can tell you companies that are big on what I have seen personally on maintenance agreements, we'll use that as the first part of the equation. I see companies that make that a major focus of the company, and maintenance agreements to be clear to do a good job for the customer, not from a selling perspective, but to do a good job and take care of the customer system and keep it running and build a better relationship with the customer and have an opportunity to talk about indoor air quality and those types of things. Because the reality is in most parts of the country, 4th of July weekend, when it's 98 degrees outside, that technician is not talking about indoor air quality. They're fixing the part and running to the 50th call they've got that week, so there's not a lot of time well spent in the customer's home. So what I have seen when they've focused on that, going back and finding out what the customer is really looking for and what makes sense for their home and makes sense for them. Typically, I have seen that companies with large amounts of maintenance agreements, 1,000, 2,000 maintenance agreements, when we've run the reports from their CRM, typically 90 to 95% of their revenue is coming from those customers. And their marketing expense is minimal, almost non-existent. And I have seen many quality companies kind of shut off their marketing just because they're getting so many calls from those maintenance customers because that relationship has been built. And I think a buyer sees that same thing. So when a buyer comes in and looks at a company with 50 maintenance agreements versus a company with 1,000 or 2,000 maintenance agreements, I can't say that they're going to pay 50 cents extra per customer on the, there's not some equation like that. But what I have found is the numbers are drastically different. If I look at valuation, if I look at a company that's doing $3 million in sales, and if I look at one that has no maintenance agreements or almost minimal amounts of maintenance agreements versus a company that has 1,500 maintenance agreements, I can tell you the profitability on the company with 1,500 maintenance agreements is substantially higher. Their Google reviews are substantially higher. Their employee retention is substantially higher. So all of those things feed into one another. So buyer or sellers will call me and say, well, I want to value it based on my maintenance agreement. And I say, that's not really the way we do it. But you're getting that value because if you're doing maintenance agreements, you're having a more profitable company and they're paying a multiple of your net income. So you're getting paid on that for doing that work. Does that make sense?
Yeah,
Absolutely.
kind of shocking, actually. You say 80 to 90% of the revenue is coming from those maintenance customers or those customers that are tied to.
No, 90% or more.
90.
If you look at it, I have found, and obviously most CRMs that they use, and I find that many people pay lots of money for CRMs they're not using and tracking the data. But when they do track the data, if they look at their maintenance customers and if they've been on a maintenance program for a number of years. Now, if they just sold maintenance agreements this year, not the case. But if you're 3 or 4 years into being serious about a maintenance program and you look at those customers that have maintenance agreements, look at the revenue generated from them, I have found typically 90% or above.
Wow. Well, that's the best advice you've given for the day. Build your maintenance, right? I mean, it really is. It's revenue for the future. And it's what somebody wants to pay you for, right? That may not get you to the 15-time multiplier, but it'll help you. Absolutely.
Well, and the reality is that I have seen is those companies, every company that I've looked at that had large quantities of maintenance agreements, marketing is substantially less. The referrals are substantially higher. The average ticket per customer is substantially higher. They're not bidding against competitors when it comes time for a change out. I mean, all these things, and it all leads to higher sale price because it's a relationship business as opposed to a transaction business at that point. And it leads to a substantially higher payout. And so, and the business is typically built around that. I mean, obviously maintenance agreements from a business perspective is a lot of work. I mean, it's not like, oh, we're going to do maintenance agreements and everybody pays $179, it's done. It's a lot of work to get with the customers and put the systems in place and making sure your technician is doing a good job out there and they're not, gassing and going. And, so there's a lot that goes into that. But I have found a business built around that brings a higher revenue because a buyer comes in and is taking over relationships as opposed to transactions.
Yeah, do you typically see the business owner staying involved for a length of time after the sale? Is that pretty highly recommended, I would gather.
Shockingly, I don't see it a lot. And I advise sellers typically, I probably shouldn't say this because buyers are going to say you shouldn't tell them that. I advise sellers not to agree to a long-term stick around. Because here's the reality. They're going to come in and they're going to change things that you've spent your entire life building. Many of the sellers I work with have been in the trade, or been in the business for 20 or 30 years. It's their baby. Their kids were raised in it. They started out of their bedroom and they've built it up to whatever level it is now. And for many of them, they're proud of what they've done and they've made a lot of mistakes to get there. And the new guy or girl is going to come in and change that. And they're going to sit there and watch these changes that they've already made the mistake on. And oftentimes that's not good for the relationship. I sold my first business, which is a financial planning company. I took less money in the sale because I sold it to somebody who I knew that knew how I ran my business, took care of my customers. And the first week he started changing everything I did. And I'm like, the reason I'm doing the revenue I'm doing is because of what I do. And they didn't agree. They changed it. And so emotionally, I think there's two components in the sale process. For me, buying and selling businesses, I built a business and sold it. The emotional part's harder than the dollar figure part, I think. I think a business is worth what it's worth. And once you've accepted the fact as a seller, this is what the business is worth, it is what it is. It's the emotional fact of tomorrow morning, you're not coming into that office anymore. Tomorrow morning, it's not your problem anymore. Tomorrow morning, those customers are not yours anymore. Tomorrow morning, those aren't your employees. And so they built relationships, and that's a hard thing to walk away from, and to say tomorrow morning they don't need you anymore. And so I think, making sure that the buyer is the buyer you want is helpful, but they're still going to change things. And so I think you need to stick around for a transition. And I don't think sell it to them on Monday and walk out on Tuesday is the answer by any means, because I think you need to be there for the customers. You need to be there for the employees, because it's a shock to them, especially long-term employees. We don't tell them typically that it's for sale. It's confidential. And so for the owner to walk in, that's been the owner for 30 years, and say, hey, guys and girls, today's my last day. I've sold it. It's emotional. Yeah. And so it's typically better to say, hey, as you know, I'm not 19 anymore. It's time for me to move on. I've found a buyer who I think is going to take care of you guys, and I'm going to be here throughout the transition. I'm going to be here working with you. We're all going to be in this together. I think that helps people stay. But typically at the end of 3 months, I believe that the seller knows, hey, is the buyer and I a good fit for me to still stick around? I've had some take on a sales capacity role or kind of an advisor role. But I know even the SBA, and Brandon can talk more about that rule, but the SBA's got rules about how long they can stick around. And so the SBA doesn't want them there long term. Brandon, can you talk about that a little?
Yeah, the SBA essentially has a rule, and they leave it kind of gray. But they essentially have a rule where they ask for the sellers to be out of the business within 12 months as a key employee. And it's up to interpretation whether it's a key employee or out in general. But generally speaking, and most of the time when people are looking to sell their business and they're not carrying any equity over, which isn't allowed with an SBA loan, most people are looking to transition for like 2 to 3 months where they stick around, they help out, they make sure the employees are happy. Sometimes they'll put together a direct mailer, and the seller will endorse the new buyer, and they send it out to their customers. But the SBA does have a rule that they don't want sellers sticking around past 12 months. But generally speaking, that's not like a huge area of contention. Most of the time, the sellers, they're ready to move on to different things and retire, and the buyer likes to have their new business to grow and do as they please.
Gotcha. All right. Thank you very much.
I didn't know that. I did not know that was I honestly never heard that. That's interesting. So we learn something new every day.
Yeah, absolutely.
So a couple of indicators for when assessing value: clean and clear books, having a lot of good maintenance agreements, good financials. What about red flags? What are some red flags you guys see that maybe these guys, after hearing this, could start addressing in their own businesses? I saw a little reaction from you, Brandon. Any red flags that are worthy of discussion?
I think it's kind of a funny one, and it's normally not an issue. But I will always check like Google reviews as a bank. We'll check to see what people's reviews are, what their Better Business Bureau pages look like. Are there a bunch of complaints? And 9 times out of 10, there's never an issue, because normally by the times the companies have gotten to $1 million or sales and more, they're employing some type of, customer appreciation reviews with people, or where, I think I just got my air conditioning unit replaced, where I got like a survey the next day, and I'm pretty sure if I had put like less than 5 stars, they would have been on top of it right away. And so like having good reviews indicates all of these extra steps that are in place already to get there. But then, having a bunch of complaints, and there's always going to be complaints, people complaining about pricing, which if I see something like that, I ignore it. Like if somebody's like, oh, they're too high, I'm like, I ignore that. But if somebody's talking about, poor work or stuff like that, you kind of go, it doesn't happen often, but it's something that we do as a bank. You think it's funny, but we do like go type in the business's name and look at. So that's one that we don't frequently see, but that we do look for.
What about you, Patrick? Any red flags other than right out of the gate asking for a 15-time multiplier?
Yeah, that's, I always ask lawsuits. I mean, what kind of potential risk? Typically, we do an asset sale, and so that risk is not necessarily going to carry over. But if there's been a problem in the past, and once again, an employee falling down and hurting themselves is not a problem. But if there's 5 customers that are suing because of something unethical, that's not something I want to get involved in, because the reality is, for many people buying a company, it's a huge business decision. They're taking on a huge amount of risk. They're taking on oftentimes a huge amount of debt, and I don't want to be involved in that. That's from my perspective, and back to the clean books. I talk to so many people that say, I'll talk to them on the phone, and I used to jump in the car and go meet with them right away, and so now I'll talk to them on the phone. They say, oh, I'm doing $2 million in sales. Oh, fantastic. Well, typically I have found a company that size, net, all in, seller discretionary, is going to be somewhere around 15%. And that's going to be a combination of their pay, what the company profit is, add back some depreciation and amortization. So, at that figure, they should be making around 300. So I'll say, what's your income level? Oh, I'm making 500,000. Oh, wow, that's fantastic. You're doing real well. That's great. Or 600,000, or some crazy figure. And so I'll say, okay, great. That's fantastic. You sure? Oh, yeah. And so now I'll say, oh, great, just send me your tax return. Okay, and they'll send me their tax return. They're doing $1.1 million in sales. On the books, it shows they're losing $25,000 a year. And I'll call them back up and say, what happened to 600,000? Oh, well, I take that in cash. Well, you put yourself in a buyer's shoes. If I come to you and say, Brian, I've got this incredible business for you to buy. They're doing $2 million in sales. They're making 600,000, but I only can prove that they're losing 25,000. But you should write a check for $2 million. You're looking at me like I've got 2 heads. You're not going to buy that. So that type of stuff. Once again, you're doing what you can to mitigate your tax expense, and expecting somebody to write you a check for it. It's just not going to happen. And so that's really where I look at. I start with the numbers and lawsuits. I always ask about that, and obviously I do the same thing as Brandon does. I'm looking at the reviews. If I can't find you anywhere on Google, and it makes me kind of wonder what's taking place. And I know buyers love businesses with good customer service, and that's what they're buying. And so if I go on there, you've got 400 5-star Google reviews, and we're heading in the right direction. If I go on there and there's 50 Google reviews that are 1.5 stars, I start questioning, what's this business focusing on?
Okay. Well, guys, I really appreciate y'all being on today. I think that's a good stopping point for us. If you're out there listening, make sure you get your books clean and clear, build up those maintenance plans, and stay tuned for the next episode where we're going to talk about how to finance all this stuff. So until then, guys, I appreciate you joining us, and we will see you next week.
Thank you very much.
Thank you all.
Thank you.